Wow, Palantir is not expected to make much profit in the upcoming years. Hey, what's up guys? Welcome to my channel, and I hope you help out a Cambodian boy that loves investing. Today, I'm giving you my thoughts on a recent article by Yahoo called Palantir Revenue Growth Needs to Accelerate for the Company to Turn a Profit Anytime Soon. The main point of this article is that Palantir is not expected to make any profit anytime soon. That's kind of repetitive. As you can see in this graph in the article, Palantir's loss in 2021 is at $1.2 billion. That loss decreases dramatically in 2022 and turns a profit in 2023 at only $37 million and then goes back into the red in 2024. So what are my thoughts on this, and should we buy Palantir? Well, first of all, though the article frames it as a negative case scenario where Palantir is not expected to make a profit anytime soon, my mind for some reason frames it in a positive way. As you can see, they're able to cut down their losses dramatically in a span of 1 year, from a loss of $1.2 billion to nearly break even. This shows that Palantir is capable of turning huge profits in the future. However, honestly, for investors, this article on profit is not that important for us investors, because what's important for us investors is whether the stock will go up or not. Many factors determine whether a stock goes up or not. It is not just profit. So is Palantir a good buy? Palantir is currently down around 40% from its all-time highs. Therefore, it is a great opportunity for investors to get into Palantir by dollar cost averaging. I know that most of us want to invest right at the bottom before it goes back up, but I have had bad experiences timing the market. Therefore, I would recommend dollar cost averaging unless you have a strong conviction of where that pivotal point is. Therefore, if you have a positive attitude like me, which I would recommend to have, Palantir is currently down 40%, and so it has a 70% upside to reach its all-time highs again. Once it turns a profit, it will probably even shoot past its all-time highs, just like Tesla did. It just goes to the moon like Tesla did after it started profiting. However, to be confident that Palantir's stock price will go up in the future, we have to look at the fundamentals of the stock to see if it's a good stock to dollar cost average in. As Warren Buffett and all other great investors said, we must first look at the moat. Therefore, I tried searching up for the market share of Palantir, but I cannot find any. So the next best option is to look at Palantir's position in the market. It's good to be in the first place. Palantir's market cap is $40.43 billion. A quick Google search showed that Palantir's competitors include Tyler Technologies, Verint, and Tableau. Another quick research shows that Tyler Technologies has a $19 billion market cap, Verint has around a $3 billion market cap, and Tableau has around a $15 billion market cap. Add these all up and the market size is around, add up all these top players up and the market size is around approximately $78 billion. As you can see, Palantir is the biggest and owns the biggest market share in the data analysis market. Therefore, Palantir does have a moat around their business. Next, to determine whether Palantir has a future in the future or whether it is a declining industry, we have to look at the growth of the market. So according to Global Newswire, the data analytics market is an important market for the future economy, and it's expected to grow at a cumulative annual growth rate of 25% until 2030. Therefore, if Palantir has an average growth rate like the market, there's a good chance that investors will see a cumulative annual growth rate of 25% in their holdings in Palantir until 2030. That is a huge amount of growth, and therefore it's a security that is well worth for us to invest in and hold in. So third, we have to look at the revenue. In modern times, what's most important is actually revenue rather than profits. Therefore, an article on Yahoo on profits should not sway investors from investing into a stock. What actually matters is the revenue. Revenue is more important because businesses can use their revenue to reinvest into their business which lowers their profit. From a outside point of view, you think that it's bad that there's not much profit. However, if a business is reinvesting their profits and those profits are generating more revenue and profits, then in the long term, when profits are no longer reinvested, the profits will just start pouring in into the business. The business will start generating lots of profits. So businesses will continue to reinvest as long as they can see that a positive ROI. In a chart of macro trends, it shows that Palantir's revenue increased by 25% in 2019 and 47% in 2020. Palantir's quarter one 2021 revenue is 49%. So as you can see, Palantir's revenue growth is high and have been increasing for the last 3 years. Therefore, Palantir is a good business. Therefore, these three indicators that are very important, that I've learned from the great investors of all times, these three indicators are all in the green. Therefore, despite there being a negative sentiment from the article regarding a negative income for the foreseeable future, I would recommend people to buy Palantir. Yeah, I would recommend people to buy Palantir. So thanks and subscribe, because I will be giving my thoughts on more articles relating to more stocks like AMC, GME, Tesla, and Apple.